Now, as we turn to Asia, we want to look at where the ASEAN manufacturing PMI is, because one of the things that we were saying is that it was going to stay positive. It was going to trend lower, but still stay positive, and that's what we continue to see. And right now, when we look out over July and August, we actually don't see it going much lower, because there's been that pivot away from China, away from some of these other areas, away from Russia. And that's going to benefit some of these nations. Now, they're facing inflation, they're facing internal pressures, but on the manufacturing front, export front, they're still going to be able to maintain expansion and growth, which is why when we talk about global growth, we see it slowing globally, but not really an outright global recession until we get either, that could change, that could be in Q4. But we really don't see that. We see it in Europe. We see pressure already in the U.S., but bumping along the bottom. So it'll be negative, but not a huge step down, which will keep us slightly elevated. Now, when we look at South Korea, CPI and inflation continuing to move back up, foreign reserves are dipping as they're expending it to try to bring inflation under control. CPI was expected at 0.5, came in at 0.6. Year over year was expected at 5.9, came in at 6%, and then core, again, 4.4%. Now, India, global manufacturing came in at 53.9. Services was the one that surprised to the upside at 59.2. So the composite was fairly strong, but the problem is we see Indian manufacturing slowing, but still in expansionary territory, which is why when we look at the ASEAN nations, when you look at India, ASEAN, China, we see that, again, that downward move. China, had that nice pop, which will help support some of the data. But again, it's that pop and then fade, which is what we expect following a lot of this catch up that we've seen. Now, India 8 core industries outputs continues to remain elevated. Inflation remains a huge problem, which is why we see that moving down, but still staying at this elevated side as companies pivot away from China, pivot away from other areas, and India remains a beneficiary of that. So South Korea manufacturing PMI moving down, but still positive. PMI output index, though, when you look at the manufacturing production, we see this coming negative. Now, overall, based on how the manufacturing PMI is calculated, it will be positive, but the leading indicators, the one that's projecting 4 or 6 months out, is moving into negative territory. And as we showed in segment 1, you're starting to see builds in computer chips. You're starting to see build in semiconductors. You're starting to see builds in some of these things, and inventory increasing, which is showing that there was an inventory shortfall coming back to that bullwhip. So manufacturing still has orders, they still have backlog, but as that gets filled and you start looking at the leading indicators, that's when you start to see that slowdown accelerating. And based on what we're talking about with ASEAN nations, India, South Korea, that's more of a Q4 event where you go into negative territory, as we do think there's enough lead time here where Q3 will show some growth. Now, when we start looking at CPI, you can see it taking off. While Japan real cash earnings are steeply negative, expected at negative 1.6, came in at negative 1.8. And just to put that into perspective, corporate profits have continued to go up in Japan as wages have actually fallen. And when you start thinking about the forever bid and for the just endless free money, it's padded profits, but has done nothing for the underlying wages, because Japan has a population problem. Japan has, an issue in terms of jobs, where there's more jobs than people, and that, again, you have to be more competitive on wages, which has enabled companies to pad earnings. Which, again, when you think about endless QE of stagnant growth, again, you can see where you're getting stagnant growth. It's at the consumer level. So as the U.S., which has been doing QE essentially since 2009, we've had fairly stagnant GDP growth because the consumer is something similar. And again, these are the pressure points, and we've shown charts over the last 2 years of how things have changed for the consumer and not for the better when weighing wages, comp, and then equity within in terms of payout. So then when you start looking at Taiwan, something similar where Taiwan CPI is going up 2.77%. The survey was for 2.8, came at 2.77. So yes, below estimates, but breaking out to the highs, which is going to be passed on. So when you start looking at South Korean inflation, Taiwanese inflation, Indian inflation, we import that. That is what the United States will import. Again, more of that, those tailwinds to inflation feeding into that stagflation backdrop. Now, the Caixin Service PMI survey was for 49.6, came in at 54.5. Again, when you look at what we had after the first lockdown, you had that pop and fade. But look at the pop. The pop after in 2020 was much stronger. And so the fade happened, but the fade wasn't to the same level. But look at every time there's that lockdown, the pop is less, and then the pullback is greater. So again, we still see it positive going into next month, but you're getting an idea of some of the headwinds that they're facing. Manufacturing PMI was expected at 50.2, it coming in at 51.7. We expect this to slow back down and bump along between slight growth, slight negative. Now, output had a nice increase that will help bridge some of the gap on the export front. But when you look at total growth, total activity, there's still a lot of these pressure points. And especially here, when you look at developers' net fundraising from bonds, has gone positive because if you remember, we've been talking about the PBOC, the CCP have been pounding the table, telling banks they have to lend, they have to get these guys money, they have to keep supporting developers. So it's not surprising to see that, but mortgage lending has slowed sharply in 2022. So the developers are getting the money, but nobody is buying what the developers are building. So again, you're creating this negative feedback loop where you're increasing the leverage of the banks, you're increasing the leverage of the developers, but there's no means of who are they selling it into. And as we've been talking about, there's a population problem. There's a lot of underlying issues that are coming through. And how are the developers getting money? Well, local government on balance sheet debt continues to rise. It surged in 2020, in 2021, and it's up again in 2022. This is a huge problem when you look at the leverage side on the local balance sheet, on the local government. So you have companies that are struggling and governments that are getting over-levered. And now when you start looking at the China Beige Book data, sales revenue and profit margin dipped in Q2, not surprising. Profit margins across all sectors got hosed. Again, it was Q2. There was nothing but lockdowns, rolling lockdowns. It's just when you look at where we were coming from, we were already coming from a point of weakness. And again, we don't see this sharp recovery. Instead, we see more headwinds, more pressure coming up. So then when you look at the credit impulse, which has been fairly flat, and again, it was a bounce and flat. And then when you look at the China Liang index, you can see it's confirming what we've been talking about. The PBOC doesn't want the credit impulses to remain, on a rate of change down. They don't want the downward pressure. They want it flat. Now, that's not really stimulus. It's not stimulus, but when you look at it overall, it's still net negative. So they're still trying to pull a little bit of that liquidity out. They're injecting some stimulus in some areas, but pulling it from others, trying to balance this because they have a leverage problem. They have a lot of issues in terms of debt overhang, and they're trying to manage that without spooking the system, without scaring the global market. And one of the interesting conversations I had on my drive home was, what happens if Xi loses the election? And again, it's a small percentage, but given the pressure that they're facing and some of the high level or key people in the government and in the shadows that aren't happy right now, those individuals are growing. And now, again, it's a low percentage, but it's not a 0% chance. And those are going to be some things to look at, because the economy is struggling. People are struggling. There's a high unemployment on all levels, especially on the younger side. They have a population issue. They have a housing problem. There's a lot of issues now that aren't going away. And the same playbook they've used since 2001, which was spend, throw money at it. And then it accelerated in 09 of, all of these infrastructure bills. Then they doubled down in 2011, then again in 2014, then again in 2016, then again in 2018, and again in 2022. It's like, okay, 2020, it's like, okay, well, where did you tighten? Where did you do quantitative tightening to help your law of diminishing returns? Instead, it's been nothing but stimulus, which is why we think that China remains in dire straits. They remain in a very problematic position, and more so than what the market gives it credit for. So that's what we have for you today. If you have any questions, again, you can find us in the comments section. You can reach out to us on Twitter. We always love the back and forth and the feedback, and we hope you're continuing to enjoy your shortened week. Thanks for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.